Asian markets were mostly trading higher today as players tried to pick up beaten down stocks from more recent sell-offs. Concern remains, however, about the economic outlook, with the IMF pointing to a global recovery that's not yet gaining full traction due to the coronavirus pandemic and its effects. Over in Japan, the Nikkei share average declined by 0.32% to close at 28,140 index points. The Hang Seng ended the day at 24,963 index points, while in mainland China, where news came through of its record trade surplus with the United States for September, the Shanghai Composite Index ended up 0.42%. Over in the United States, US stocks finished lower on Tuesday, with investors jittery in the run-up to third quarter earnings, while a jump in Tesla shares helped to support the market. The S&P 500 lost 0.25%, while the Nasdaq Composite lost 0.14%. The Dow Jones Industrial Average fell by 0.35%. Let's take a look at the other indicators. Well, to give us her impressions on the developments on the market, I'm joined by Chantel Marks. She's the head of research at FNB Wealth and Investments. Thanks very much for joining us, Chantel. So the IMF's report says that the global economic recovery is indeed happening, but the momentum continues to be disturbed by the pandemic. And then on top of that, there are also concerns around the persistence of higher inflation. How is this translating into markets?
So, this uncertainty that's also expressed by the IMF. So the global recovery is jittery. Everyone's concerned about inflation. That is absolutely what's being reflected in markets right now. So markets are quite volatile. We'll have a strong upswing for a few days, and then we'll have markets correcting quite sharply the next few days. Very dependent on news flow and data points at this point in time. So it really is reflecting what the IMF is saying. A lot of uncertainty still in the system. Yeah. So China, which is the second biggest economy in the world, they recorded a healthy September trade surplus with the United States. That's $42 billion US. That's up around 30% on the same time last year. I know it's just one data point, but what's your reading of this? Is that old trade war that we were always talking about, is that now over? I certainly don't think that the trade war is over, and this might just reignite the negative sentiment towards China and trade and the trade imbalance generally from the US's perspective. But what it does show us is that there is demand for Chinese goods. There is demand for goods out there, and the fact that they were able to improve exports by that margin and by that much more than anticipated does point to what could be interpreted as a decently or a pretty healthy manufacturing sector in China. Of course, the Chinese government is looking to move that economy more into a consumer type story, but it's still very important for China to maintain strong export growth and to maintain a trade surplus in order for it to boost its ambitions.
Yeah, speaking of the consumer, we've had fairly negative data out here in South Africa, the retail sales data for August. The market was expecting a print of 2.8%, that is up, but we've now seen that retail sales declined by 1.3% on a year-on-year basis. What's the market reaction to that, and to what extent as well do you think that this has to do with the impacts of the unrest in July that perhaps affected supply chains?
Yeah, it's actually quite interesting. So definitely a surprise to the downside. And I see from 1 o'clock the general retail index has subsided a little bit. I had a quick look, though, at the Stats SA release, and it seems as if the downturn was really driven by furniture and appliance retailers as well as hardware. And you'll remember that last year in August, it was back to the shops for most South Africans, and they were buying furniture for their houses where they were stuck for 3.5 months. And they were also going to buy paint and hardware in order to upgrade their abodes. So perhaps just that base effect playing a little bit of a role here. But I am not seeing any sort of reaction from the likes of a Lewis and Cashbull. So perhaps that retracement was expected. The other category that really came under pressure was general dealers. And I think that's probably where the disappointment came from. It's also a very difficult category to predict. But yeah, let's watch that space. I mean, it could just be latent supply chain impacts from July, but it could also point to a consumer that is still under pressure, employment conditions that are still poor, and an economy that's still struggling to recover.
I did see a nice story earlier about the fact that the price of the commodity cocoa is actually on the rise as globally people seem to be getting back into chocolate. You know, what are the dynamics behind that?
Yeah, I mean, that's actually quite interesting. There are obviously supply factors as well, but what I find quite interesting is that there's an increase in demand for chocolate and chocolate products. So, I mean, obviously there would have been some sort of an impact from kind of the general wellness movement globally, perhaps people frowning upon chocolate goods, but there could have also been a bit of a factor at play during the pandemic. I'm just thinking of one of my guilty pleasures is having a chocolate all by myself, but during lockdowns you never all by yourself. So I think that some of those dynamics are quite interesting, perhaps a bit of a resumption in secret eating, also perhaps people just saying, you know what, there's a pandemic, I'm eating my chocolate.
Indeed. Chantel, more to ask, but not enough time. Thank you very much for your time and insights there. Chantel Marks, she's the head of research at FNB Wealth and Investments. We're going to take a quick break. We'll have more news for you thereafter.